Petronas and its partners are pulling the plug on the proposed $27 billion Canadian LNG project. The state-owned oil firm says it made a careful and total review of the project and decided to scrap it due to prolonged depressed prices and shifts in the energy industry. However, Petronas says it remains committed to developing its gas assets in Canada. It will continue to explore all options. Its partners in the now aborted project are China Petrochemical, Japan Petroleum Exploration, Indian Oil, and Brunei National Petroleum. The facility that would have been set up under this project would produce as much as 19.2 million tons of LNG per year and open up a new trade route for Canadian gas to be shipped to Asia. Bursa Malaysia's net profit grew 20.3% for its second quarter ended June 30th this year, thanks to an increase in profit in its securities market segment. Earnings came in at about 60 million ringgit from 50 million a year earlier. Revenue also increased as well, up 10% to 142.7 million ringgit from 130 million last year. As for its half-year report card, net profit grew by some 17% to 116.2 million, while top line was up 8% to 285.4 million. The group proposed an interim dividend of 20 cents per share and a special dividend of 15 cents per share. Bursa Chief Tajuddin Nathan says the strong performance was on the back of increased trading activities across all segments, and that it is seeing renewed interest especially from foreign funds who are continuing to return to Malaysia's capital market since the start of the year. Moving forward, Nathan says he is cautiously optimistic about the growth momentum for the rest of the year. Chinese property giant Dalian Wanda Group is said to have abandoned its bid for the multi-billion-dollar Bandar Malaysia project. The firm had been considered a frontrunner for the development for the past 3 months. However, it recently found itself the target of China's regulators amid a crackdown on overseas acquisitions. According to South China Morning Post, Wanda's founder Wan Jianling vowed to shift his investment focus mainly in China. This is after Beijing instructed the country's largest lenders to cut funding for 6 of the company's overseas acquisitions. The Bandar Malaysia project was not among the 6 that lost funding support. Yesterday, the Straits Times, citing Malaysian government officials, reported that 9 pitches from Chinese and Japanese companies had come in for the Bandar Malaysia project. Wanda was not among them. Meanwhile, EcoWest shares rose by over 5% today, on anticipation that its related group Iskandar Waterfront City may get a second chance to bid for the job. It closed 4.6% higher at 1 ringgit 13 cents today. Iskandar Waterfront City rose as much as 3% to end the day at 1 ringgit 37 cents. Good news for frequent domestic travellers. Malaysians are exempted from tourism tax at all hotels in the country. Foreign tourists, however, will be taxed a flat rate of 10 ringgit per room per night. Tourism and Culture Minister Mohammed Nasri Abdul Aziz says the government decided to waive the tax for locals after considering the views of associations and the public. As for foreign travellers, the 10 ringgit rate at all hotels is to simplify the collection mechanism for the Customs Department. Nasri said 1 ringgit from the rate will be returned to the respective tourism division in the states to help their marketing activities and upgrade facilities. He adds that the implementation date, which was supposed to be the 1st of July, has been deferred till later and that the PM will make the announcement soon. The new tax is expected to earn Putrajaya about 210.9 million ringgit based on the average occupancy rate of 60% from about 240,000 hotels and homestay premises. AirAsia says plans to list Indonesia AirAsia and Philippines AirAsia in the respective countries are well underway, with the deadline set for the first quarter of 2018. Group Chief Tony Fernandez says the Indonesia unit would probably list before its Philippines counterpart. The move would give the group the currency to look at combining all its units into one single listed ASEAN holding company. The market is bearish on both subsidiaries as they are in the red, but Fernandez sees great value in the 2 companies. In response to the market telling the group to close down the units, he says AirAsia invests for the long term, not for short-term quarterly profits.